Hi everyone, Drini here, and welcome to my channel. So we're going to take a look at Axie Infinity today, in particular the AXS token, just to see where we are. Also, now that we are in a bearish phase of a lengthened cycle, we may be here for a while. So this is a very good time to actually establish a proper game plan during this phase so that we know how to chart our way moving forward. And let's dive in. One thing about this cycle is it is very different from the previous cycles that have happened beforehand. Comparing to the simplistic nature of the previous cycles, we have had 4 major corrections as of the moment. One of the funniest things about this recent price action is we are still pretty much holding bullish support structures right here. So we are still above the EMAs on a monthly level. So technically, the cycle is still intact and we are still going to go upwards from here. But when you look at the impact of the coins, apart from Bitcoin, everything else has pretty much fallen 70, 80, 90%, mimicking the bear markets of before. So for example, in the previous bear market of 2017 all the way to 2018, altcoins went down as much as 98% from the all-time highs. So if you look at any other crypto, especially our gaming cryptos, pretty much everything has fallen by 98% in spite of the market structure still being intact, and we are still pretty much technically in a continuation moving forward. So right now for AXS, with the all-time high right here and this recent low, we are actually down 73%. So from a price action perspective, AXS is actually holding strong as compared to other gaming cryptos that have already fallen 90-92%. So that's actually one positive thing about AXS. In our last video, we did establish that there are 3 support structures that we needed to hold during this particular drawdown right here, because otherwise you would start a free fall. And right now, during the subsequent downtrend, if you notice, we tried holding the 78 right here, but we failed. We tried to rally back up, but we now met the $78 as resistance. Then during the recent capitulation a couple of weeks ago, we have pretty much fallen to this $50 price level right here that we established before. Why here? That is because if you look to the left, there's not much support structures holding this particular price. So once we broke through the 63, it went all the way down to 50. Right now, where are we? We are pretty much hovering within this zone right here, crossing in and out of the $50 range. And why is that? That is because the $50 support is no longer respected by this recent price action. Instead, what's happening right now is you have a couple of support structures that we are ranging in. This resistance line right here and this support line right here. So the current price where we are ranging is around $55 and $44.60. Moving forward though, where do we go from here? So I mentioned earlier that we are currently in a bearish phase of a lengthened cycle, and during this bearish phase, things can go really significantly from the all-time high, where we are only at 73%. A question that you may have is, do we have to wait for a 98% correction before coming in? Not necessarily. That is because, once again, the market is primed for continuation as long as we hold market structures. So a much better strategy is to establish risk thresholds. So a risk threshold, if you haven't been watching my videos over the past couple of weeks now, is a price level where you tell yourself that past this particular price level, you no longer DCA into that investment. But anything below that, so for example, if we continue to range around here, then this is pretty much your DCA zone right here. But once it crosses the $55 range, you stop investing entirely. So if it goes up right here, you stop. If it goes down, you invest. If it goes up, you stop. If it goes down, you invest. This opportunity is only afforded by a bear market. And why is a risk threshold important? That is because it teaches you the proper investing discipline that past a particular price level, the risk of going down or the downside risk above the risk threshold that you have is much higher than the upside gains that you will receive. So moving forward, what are our potential risk thresholds? Given that we have mapped out the support areas from before, this actually gives us a prime opportunity to establish multiple risk thresholds that we can have. If we just refer to our support structures and map out our own based on this particular structure, then we have a few. This particular support level right here of around $68, this particular swing high right here of around $80. So you can have multiple thresholds depending on your risk tolerance. If you're slightly more conservative, then you establish lower risk thresholds right here. So for example, $55 is a good risk threshold. As long as we're below here, then you continue to invest. If you're very conservative, wait for the markets to really capitulate and only invest when it's below $44 because that is pretty much our support area right here. That is also a potential risk threshold if you're ultra careful and ultra conservative. If you're slightly more aggressive, then of course you can aim for the higher price thresholds right here. Because what you're saying is you don't mind taking additional risk of further downside because you currently believe in the project and you think it's going to moon eventually. But one of the good things about this bear market is it has given us a prime opportunity for accumulation. And now that we have been given this opportunity, the best thing for us is pretty much to maximize this opportunity, but we do it with discipline. If you like that video, hit like and subscribe, hit the notification bell. Also, let me know what you think in the comments. Do you want me to make a video about your favorite gaming crypto? Be a Patreon subscriber so you can request for it. Being a Patreon subscriber helps keep the channel sponsor, shill, and Moonboy free. Take care everyone. Bye-bye.